everyone, Albert Pavon here with Pavon Realty Group, bringing you another video here with Kevin Coleman with SWBC Mortgage Corp. And we wanted to do a segment for the millennials. You know, coming back home, deciding, hey, am I gonna live with my parents or are we gonna rent something? And really breaking down numbers so you can see truly which is gonna be the best option for you. One of the things that we always know, the American dream is owning your own property, but some people just say, hey, I'm gonna rent until I think I'm ready to buy, or they don't know they think that they need this extraordinary credit score. If you look at the videos we've done before, kind of talks about, hey, we need a high credit score, we need a big down payment. I wanna use for this scenario, let's just say a $300,000 house, if you're okay with that.
Yep,
okay,
that works.
So typically in a $300,000 house, I would tell you in this market, rents anywhere from $2,000, $2,400, okay, for that family starting out.
Yep.
Condos, different scenarios, single family homes. Let's just use that for this example. Is
Okay.
that cool? Anytime that you go to rent this property, okay, landlord usually wants a pretty good credit score, you know? So let's say a 600, 620 to start out with.
Okay.
The landlord's gonna want you to have first, last security.
Okay.
Okay, so just to simplify, let's just use 2,000 for that.
Okay.
Okay. I wanna know from your side on lending, again, I want you to go into detail as well as talking about what's the minimal credit score that you guys offer? What's that minimal down payment?
Okay.
Maybe we could show them the numbers so that they can make the educated decision on what would be the smartest thing to do.
Well, the big thing that I always dive into is this. If you're paying rent from a private individual, you're probably paying somebody else's mortgage. So whether you have a mortgage or paying rent, you're paying a mortgage. Either way, there's no way to slice or dice it. Now, if you're looking at a $300,000 house and say the rent's $2,000 a month, and then say they collect first, last security, well, that's gonna be $6,000 just to move into that home before anything takes place out of pocket. Now, that same $300,000 house, if you're a first-time home buyer, you can qualify for it with 3% down. Now, 3% down of the $300,000 sales price would be $9,000. So if you can come out of pocket with a little bit of additional funds, which by the way could be a gift from a family member to help you get started.
You can.
Yes, absolutely, 100%. You can now be paying your own mortgage instead of paying somebody else's mortgage. Now, I have a lot of, I'm really into owning your own home and not paying rent. And the reason I want to talk about this is because when you own your own home and you buy your first home, you're probably buying your starter home. So it's probably, well, how many years would you say?
Well, statistically speaking, the first-time home buyer won't stay in their first home for more than 5 to 7 years.
Okay.
Okay. By then, they've either started a family or they've had a new job transfer.
Okay.
I mean, there's 100 different scenarios, but it's just been studied. 5 to 7 years is pretty typical first-time home ownership.
So just from a number perspective, and I'll dive into something else in a minute on the monthly payment. But say you do the 3% down payment. So you started off on a $300,000 house with a $291,000 loan amount. After 5 years, you've probably paid down about $30,000 in principal on that house.
Okay, so instant equity.
Yep, and then incidentally, after 5 years, the typical growth for a home, like in a stable, normal market that we're in, I would say 2 or 3% anyways per year.
Depending on what area you are in Palm Beach County, sometimes even higher.
So let's just say on the low end, say it was a 3% growth for 5 years. So now you're looking at a home that might be worth $325,000, $330,000. You owe $260 something thousand. Well, when you sell it, you're going to have a pretty decent amount of equity. The reason to sell your starter home, generally speaking, is to move up and get a larger home.
Or move up, or just move the area because of the new relocation, whatever the case is. And just to go on this, not to cut Kevin off, but as a buyer, having that equity, right, you're going to be able to use this for your next purchase. I mean, in the last 24 months, we've been really noticing a lot of people taking that equity from their home to use it to purchase their next home.
Yes.
So, you know.
That's like your savings account.
Yes.
In a crazy way. And you're not even trying to save it. It's just working the magic out of itself.
Automatic.
Which is a great thing. And the other thing I want to dive into, that same house that, let's just say a $300,000 house, typical rent's going to be above $2,000 a month. There's a good possibility that your mortgage payment's going to be lower than the rental payment. And
Come on now.
absolutely, with rates where they're at near historic lows, it's definitely possible, for sure.
So I can build equity.
Yep,
I can own my own home.
correct.
I don't have to worry about if I can paint the walls or not.
You can do whatever you like.
Right? You're paying your own mortgage, not
Correct.
someone else's.
Yes.
Right?
Mm-hmm.
And you're living the American dream.
Yes, and you got into the home with first last security, plus either a couple extra dollars you saved up out of pocket, or if family members were nice enough to help you with a gift, that's how you purchased it.
So owning your first home is actually pretty simple.
Very simple, yes, and very, the best way to describe it, very simple, and it helps you build long-term wealth.
Okay. Well, guys, I really hope you enjoyed that section. We'll break down in another video talking about how to generate and create that family wealth and things like that down the road. Once again, don't forget to subscribe, leave your comments below, and thanks for watching.
Thank you. Like it.